Hello, everybody. My name is Alberto Lavandeira. I am the CEO of Atalaya Mining. And the idea here would be to speak a little bit about the results second quarter and first half of 22, and probably go through our results and how we see the future for this year and obviously the future of the company.
Brilliant. Alberto, good to see you again. Enjoyed the last conversation immensely, and I want to pick up on some of those topics, certainly around the energy, because I think that's the big discussion point across Europe, across most industries, in fact. But let's talk about the Q2 numbers now. Generally down. It's been a tough 12 months, hasn't it?
It has been tough, I would say, 6 months. I mean, we went through a fantastic result during 2021. And suddenly we got into the perfect storm of energy prices with general global inflation, with oil, explosives, tires, basically you name it. And well, it's a tough situation that we are weathering. But if you think of it, at the end, it's mining is a long-term business, and mine life is 15 years so far, and probably more. And this is just 6 months. We are ready to continue next year with much better views in our prices.
Okay, so six months then. I mean, the conversation of late, the narrative of late, has been around inflation, and some people will be affected in different ways. So you mentioned some of those. You're talking about explosives and energy costs and tires, and it's kind of hitting you left, right, and center. What do you do about it? In fact, I tell you what, here's a better question for you. As a percentage of your costs, what does energy represent in that mix?
Yeah, you see, in general, our costs have been always around 10-11%. Energy represents 10-11% of our total costs. Normally, the typical energy price is around 60 euros megawatt hour. To give you an idea, this first 6 months we have been running around 240. So that's 4 times higher. So although there has been general inflation, now our energy costs are running almost 30% of the costs. There are other things like diesel and explosives, which is linked with gas prices, which are also higher, but the important one is energy. So a good point is, what are we doing? Well, look, about 3 years ago, we decided to construct a solar plant, and this had nothing to do with this price, with price increase. I mean, we did that when the prices were low. Actually, it was almost difficult to justify to build your solar plant. We did that for several reasons. We had the land, it's a future, lots of other things, and now it's a sensible decision. Now, what happens in the future? We also, in the beginning of this year, we signed a power purchase agreement with an energy supplier that will set a long-term agreement, 10 years, like we hedged. We covered ourselves for 10 years at a price which is almost 5 times lower than what we have right now in the market. Those two coverages, let's call it, with solar and a power agreement, long-term agreement, are basically covering almost a little bit more than 50% of our needs, which means that we would have covered 50% of our needs at around 4 times lower than the current market price. So with those measures, long-term, and starting already in January, our cost used to be around, electricity cost used to be around 10-11%. Now they are close to 30. We will get them back to, let's say, around 15, assuming the prices of electricity stay as they are. I don't think that will be the case for several reasons, but the main reason is that this is not affordable for the whole Spain, for the whole Europe, and it will have to be sorted out with more solar, with more wind specifically, which are fast to implement. And of course, the gas price is going down.
It's a difficult environment. We've seen Glencore's Nearstar plant go into care and maintenance, and that's just this morning. We're seeing this huge impact that energy prices are having on industry across Europe. You had already started some defensible strategies. Is it, when you say, I don't believe prices will stay the same, is this in your control? Does the Spanish government need to step in? We're seeing that in the UK with the language of windfall taxes on fossil fuel companies. We're seeing, and obviously gas is a big component of energy in Spain. We're seeing, maybe support from governments to help, domestic fuel buyers with their energy needs as well. So how much of this is you've got to be masters of your own destiny, and how much of it is, what is the government going to do for me?
Look, the government will have to do something, because at the end they are collecting very high taxes. I mean, for example, diesel price in Spain, 50% taxes. So the price goes up. I mean, they will have to do something to tame the inflation. This is not only affecting us; it's affecting all the industries.
What percentage did you say? I just lost you there when you said the percentage.
Almost 50%.
50
are taxes.
50. Wow.
Yeah. That's the tax charge of some diesel and gasoline and all this. So, what needs to be done? I think, from the country point of view and from Europe point of view, several things. One is to speed up the construction of electric lines interconnecting the whole Europe, the whole Spain. There's wind going on in Spain, in Scotland, but it's not a problem of building new windmills. It's a problem of transporting that electricity to the place where it's consumed. It's important to speed up the construction of more solar and to have a storage capacity. Call it batteries, call it pumps or hydro, or call it whatever. Hydrogen in the future is probably a storage of energy. And this thing needs to be done fast. The money is there. And what the governments need to do is to avoid the case of a solar plant taking 2 years to permit. I mean, it takes longer to permit than to construct. This cannot happen. In Spain, specifically in the northwest, there are some big wind farms. It's a very windy area that are stopped not because of the wind farm in itself, but by the transmission line, because there's protests from environmental groups, from pressure groups, call it X, or they don't like to see the transmission line because they say it spoils the landscape. Well, this thing has to sort it out. They will have to extend the life of the nuclear plants. Spain, Germany. Same thing with the coal. I mean, there were some coal power plants that were demolished. I mean, you cannot demolish a structure that's there to produce cheaper energy if needed. Because the problem here is the system that we have is very sensible for these high variations. And we are in a system which is a marginal system, which the high cost producer sets the price for everybody. This is something that was fine when the difference between electricity produced by gas and the electricity produced by other systems were not that great. When now it's 5 times larger, this system has to be reviewed. Otherwise, it doesn't make sense. It doesn't make sense that Spain, that roughly uses 10% of electricity produced by gas, this price of gas sets the price for the rest. It's not logical, because solar, wind, nuclear are there, have been there for the last 10 years, and the price in Spain used to oscillate between 40 and 60 euros megawatt hour. And the utilities were making very nice margins, giving very good dividends. So that has not changed. Cannot be that this gas crisis creates a turbulence all over. It's affecting the steel factories, it's affecting the ceramic industry, that's really gas. It's affecting all the electrochemical, electro-intensive plants like these smelters. I mean, we are going to be shifting production from other places. And if you shut down a smelter, alumina smelter, or a zinc smelter, it's quite difficult to open it again. It takes time.
It takes time. It does take time. So look, there's an energy crisis across Europe. I want to argue globally, but it's very specifically Europe at the moment, and it's a problem that needs to be resolved. And like, I don't want to make this about an electricity show. I've got to talk about how it affects you. You've taken some measures to obviously address this yourself. You've made the point it's a cyclical market and it's a long-term game here. So, in terms of the strategies that you've got in place now, are you happy that can get you out the other side, or do you think there's a kind of a limited time frame for what you can do and what you can control in terms of these pricing, and will it affect your decision making in terms of the intensity at which you move the operational side of the business, which I do want to come on to forwards, because obviously. You've got to think, well, do I ramp this up or do I hunker down until things are a little bit better? But it all affects the balance sheet. It all affects the balance sheet.
You're right. Look, first of all, we have a fantastic balance sheet. So right now we could afford perfectly to stop for a while and start again in January. So wait, let's see what happens and let's the electricity price settle a little bit. It could make sense because we have very low fixed costs. Most of our costs are variable, so the cost of manpower are relatively, let's call it, low compared to the rest. It could make sense, but nothing has been decided in that sense. But this is a long-term business. As I say, we can weather the storm perfectly, and months is nothing in my life of 15 years. And as I said, starting in January, we already will see a big decline. When the solar plant kicks in, we will see another huge decline. We are also speeding up the permitting of some wind turbines for self-consumption, because we have some wind there, and we have, as I said, a very good balance sheet. And that will also reduce again the dependency of energy. But at the end, the long term, these prices will go down to what is normally in Japan, in the US, in other places where, yes, there has been inflation of energy, but 20%, 3%. Will it slow down our investment? Well, you know what? I think we have to invest in the declines of the market. We have seen that with this inflation, we have seen the fear of a recession coming, which can come. It can come. And there are lots of possibilities that due to this, let's say, general inflation, there is a recession worldwide. But this, again, a short cycle that will result in a case where how do you cope with high electric prices and high gas prices? Reducing your dependence on gas and oil, which can only come from wind and solar, and of course other things that are, especially wind and solar, or nuclear, but takes longer, which is very intensive in use of copper. So that would be good for copper prices. So we will not see a recession that will affect the copper prices to make all the mines unprofitable. And ours, first one. Second thing, this high inflation will also mean high inflation for your new capex, which means new projects will not be built. New projects will not be sanctioned, will not be approved, because the capital intensity will go up, and because operating costs are high. At the moment, the senior management goes to the board to get the approval. You cannot go to the board and say, oh, by the way, give me 5 billion to construct this project, and don't worry, this will be economic when the price of electricity goes down. But right now it's not economic, but give me 5 billion, we will start. So what does it mean? It means that new projects, greenfield, will not be approved until things settle. Only brownfields or operating mines. The end result will be that the time will continue, And because you need the copper to get this green energy, to electric cars, certification, hydrogen. Everybody talks about hydrogen. Where is the electricity going to come from to generate the hydrogen? It means the cycle for copper is going to be quite good. It means that even if there is a recession, it will mean higher prices will come up sooner rather than later. And the rest of the things like diesel is already starting to go down. Why? Because if there is a kind of recession, there's less consumption. So look, strange situation, but things are good in the medium term. And we only have a few months to continue with this bad situation. Even with this high cost, we still generated very interesting EBITDA of over 40 million euros in the first 6 months. One can argue that the previous year was 100. Of course, there's a big decrease. But as I said, most of it was coming from electricity. But they're still generating cash. And we just need to pass this few months that we have until January.
Yeah, no, I understand. The numbers are okay. Comparatively, they look down, but they continue, comparatively to what we're seeing elsewhere, be very good. Profit after tax in Q1, 12 million euros. It's all good, but it's about, I guess, painting the picture for investors looking in. Copper. We're hearing this big thematic of, EV revolutions in Europe, US, even in Asia. Infrastructure builds, which may be slowing down, which may be slowed down because of, again, talk of recession, etc. Certainly, it's risk off in most markets at the moment. So I get the thesis here. The bit that interests me is your analysis saying that, well, actually, who's going to fund new capex, greenfield capex projects in an environment like this? Not a lot of people. And so my question is, I wonder what that does to the copper price. Because again, like nickel, copper's kind of come off in recent times. And you think in the picture that you paint, why on earth would it do that? There's no big new copper mines coming on tap. No one's going to fund new, plants to kind of process this concentrate. So why isn't price moving to higher heights than it currently is?
I suppose because of the perception that there's new production coming in and there's going to be a slowdown. But the market is very tight. The metal market is very tight. The premium for metal, if you want real copper to produce something, you have to pay a premium over the market in the consumers. So it means there's no huge deposit sitting around with lots of copper. And what this means is that if there is, for some reason, and these things happen, there is one mine coming off stream because it has an accident, or you have seen most of the companies reporting lower production than expected, the market balance is very tight. We're talking about 1 week stock is nothing. So you only need some problem and the prices can spike up because there's no stock. So I don't see the prices of copper going down. I think the risk is upward, not going down. It can go down for a short while. I think there's no physical reason to continue going down under the cost of production because there's no stocks. And the world continues to be requiring copper and more if you go to all this generation of power that needs more copper. Electric vehicles, the infrastructure to load them, wind turbines, offshore wind, solar, all these requires more and more copper.
It does, but again, it's just coming back to make myself feel comfortable, make retail investors feel comfortable about this stuff. It's like, okay, it's going to be harder for new entrants to come in. There's not a lot of capex happening here. The companies that are producing should benefit from rising copper prices. They should, but there's also rising cost environment. So that perhaps the margins stay the same. It's just that we've got a different, a higher low and a higher high in that. So I'm trying to work out what the upside for the guys who survive is, and what's the upside for the retailers who invest in those guys who can survive is. Do you know, in terms of placing bets as an investor, who is going to survive? Do the fundamental economics change in terms of margin? Because it's about making money. It's about paying dividends, like you do. You know, what's this new environment look like going forward? Is there going to be a kind of massive stepping point, you know, step change in the market dynamics as a result of the picture you paint?
Well, if somebody bought shares of copper companies like ours or any other producer at this point of the market and just have them there sitting down for 5 years without looking at them, I bet you that all of them will have gone up in the long term, something that you cannot say with other industries. So right now, I believe we are in a low point. I wouldn't make the same bets for companies that are very long term, like development companies that need several $1 billion, and the time frame we are talking is 10 years or whatever years, or even exploration companies, unless they are spectacular. So I think the perspective for those producers is quite good, even with a high cost environment.
Interesting. Okay. Well, let's look at one of the other factors, I think, which, you know, again, it's in your control and it can create value. Or perceived value, which is around the exploration. We talked last time out about potential of some of your exploration could meaningfully increase the grade which you are mining. It also has, partly because it has meaningful byproduct in zinc and lead. So, you know, what are you doing on that front? Have things moved forward, or again, are you kind of holding back?
No, we continue. Look, this is something that people ask us, okay, with the slowdown in cash flow, do you continue with exploration? Yes, we continue. Actually, we have 5 rigs going on. You need to find new resources to give optionality to your shares. And then the shares of a mining company are like an option on the underlying commodity. So it's like an option in copper prices. Within 10 years, there will be cycles up and down, and the shares will move up and down like an option, but it's much more leveraged. An option, in order to have a good value, needs time. The longer the time, the better the value. So a company with short mine life has very low optionality, because it could happen with a short life that there is a cycle of low prices. We need to increase our life. We know that if we have a 15 to 20 years life, we are going to see fantastic times. So that's the reason why exploration needs to continue. Your point of higher grade is absolutely correct, because obviously, if we can put into production some areas that are close to our mine with double the grade, where we can use the same installations and we don't need a huge investment like San Dionisio or San Antonio or Masa Valverde, which are using the same installation, you can process higher grade, then your cost will go down, because you have more or less the same costs per ton, but you use more copper on the same ton. So that's also important, because you are making investments to reduce your operating costs in the future, so your margins in the future. So yes, we continue doing exploration, and we can continue doing the permitting of those, because we are sure that the metal price will recover and it will be very profitable.
Okay. Well, and is there anything else that you think you are focused on that will, again, make this position of yours defensible? We've talked energy clearly. We've talked exploration just now clearly. It's kind of a very tight market, as you say, and you actually got to pay a premium here. People may not have appreciated that. But what are the other components that you look at and see as big elements in terms of your future success that need to be either addressed, managed, or at least paid attention to?
Look, our company, you have to look at the fundamental value. Our company right now is incredibly cheap. I mean, imagine this year was a disaster of costs. Yeah, fine. But at the end, we're trading, let's say, 250 to, with a simple 140 million shares. So 400 million pounds with basically 60 million euros, so 50 million pounds more or less, net cash position. It means that the value of our company is less or similar to the investment we have done in equipment and steel, which means right now somebody's buying all those installations and the mineral rights without having to pay at all for the metal. It's amazingly different to other companies where still have a resource, but they still have to invest. Some companies have 400 million market cap, but they still need to add 500 million to get there. Our case is we are there already. I think this is the main point. I mean, the value is the value. That's the long-term value. It's not the short-term. It's like when you bought a house that costs basically the price of the bricks, and you're not paying for the land or the works that has gone there. It has to catch up at a certain time.
Well, I hope it does. I hope it does. So, as ever, Alberto, very insightful look at what's going on in the markets, but also, you know, what you're doing and how you're managing things. So, look, I appreciate your time today, and I also know you're on holiday. So I appreciate you phoning. Sort of. Okay. But I appreciate you phoning in and giving some updates, and we look forward to hearing from you soon.
Okay. Thanks a lot, then.